Yes, sir. Today got a bit of a trade recap on a long on ES and long on NQ that made us about $2,000, as you can see, on a fresh new Apex account. And in case you want to get yourself an Apex account as well, here's my code. You get the best discount out of it. All right. So what I was seeing, and I sent out this to my premium, was that for market open, I wanted NQ. This works as well for ES. For market to manipulate lower to then head higher throughout the rest of the day. And it did sweep liquidity before the market open, and I expected it to do another sweep. This why? I usually say futures is a bit easier just because of the market open fact that you can avoid the smart money trap. Meaning, imagine you have a liquidity. And so in Forex, you will see that liquidity sweep of the major liquidity, and you would immediately short it at the first breaker structure. Let's say it's here. You would short it right here, and then you would get manipulated. In futures, that can happen as well. But the thing is, most of the times, this sweep occurs during the market open, right? With the huge volatility for the market open. So if you're already anticipated the market open, if you don't trade beforehand, then you're most likely not following under these, right? Because this sweep can also be made during the hour before market open. And then you might have a breaker structure lower. So then two things can happen. We can either have a continuation on the market open, or we can have a huge move to sweep everybody that was shorting around here, making this a smart money trap. To then you can take advantage of the shorts because of the smart money trap cycle. This was a trap, so this was most likely become a trap. This being because people that were shorting here believe that we're actually bullish, and so now they will try to buy here, and the market would simply just take everybody out. All right, so in this case, it was exactly what happened for ES and NQ. We manipulated, right, did a sweep of liquidity before the market open. Okay, so for UTC plus 2, the market open is 3:30 p.m. All right, I'm staying in Europe. So as you can see, we had already swept London before the actual market open with a tiny bit of a sweep. You can either even consider it as an equal low. Then we sweep it, we come to an order block. Don't really like to trust order blocks, but they work better in futures than they do in Forex. And then it's just a matter of holding. And holding where? You got Asia highs, you got a previous daily high, or from 2 days ago, right? Previous weekly high. And that's also making a lot of equal highs with this structure right here, with all-time highs. So we have a bunch of resistance, and this is the kind of internal trades in order to search for the major liquidity. Because you can have trades where you wait for the major liquidity to get swept, and then you trade the opposite moves. Or you can have internal trades, meaning inside of the range, to look for that major liquidity sweep, because you know it's certain for price to sweep it. So in this case, it was exactly that. And the risky wise internal and risky because it's inside of the range. It's inside of these two liquidities, right? Even this one. And you can even consider it even lower. But with this range, it's all right, right? It's all right if we sweep, if we trade outside of it, outside of these two. But yeah, you can even be correct, meaning we'll get the sweep, but in the case of your trade, we can easily take you out and then go towards that point, to that liquidity and that level. But by then, you would have already been stopped out, even though you were correct on your idea. So these internals are more risky. You need to be more precise with your entry. But yeah, they can deliver you some nice profits from time to time. So that's exactly what I did. We saw the sweep of London. We saw a double sweep within the market open timing. And then we just position ourselves on this level. There's kind of M5 candles, perhaps a M1 structure. I think I considered it more, yeah, kind of like this high that made this low, right? but also because I think it is M5 candle wick, if I'm not mistaken. Yeah, it's from another wick. All right. And then for the NQ, I mean the resistance. There was also a huge resistance on NQ, which gives me a beautiful target as well. It's just that the entry was a bit more aggressive, and so I took it with a larger stop loss. Go through around here and check the precision. Like this is exactly the level I wanted to target. Initially, my trade was like this, but I kind of canceled around this level where AES was also giving me a TP. So yeah, I didn't lose on much, right? Because I knew these levels would get hit. Okay. So in here, basically the same story. You got the order block being hit, and then I took on some M15 candles, but then I refined it to this M5 because if this would get hit, this will most likely get hit. All right, I don't want to get too specific on that. A bit of an aggressive stop loss here, but then could I refine it? Yes, maybe to here. But then I would be doing with structure that's past the liquidity sweep. And I want to do it with structure that made the liquidity sweep, such as this one, that did the actual sweep, and not this one, right? I'm talking about entering like this and not entering like this, if I make myself understandable. All right. So we made about, I don't know, 300, 500, I think. Yeah, 500, about 500 on NQ and about 1.5K on ES. So ES was our larger positioning today. And yeah, you can see where price starts to rebound from. It's those liquidities. And even on this case, I knew that once we sweep this, we could have had some reaction. I could have been stopped out, but that didn't happen. And even on NQ, you already know I usually don't do break evens on futures. I do see a lot of trades getting to my break even, going crazy on futures, and then going right back. And this is all just to sweep up a bunch of liquidity, right? We sweep liquidity, we go higher. We sweep liquidity again, we go higher. It's all a matter of that. Like, this is how the liquidity structure will move. Same in this case. Going up, going up, going up. Right? It can go up forever. We sweep liquidity. Then we continue to move higher. Right? So this is how I managed to do it on a fresh account today, on a cool 50K. That was fresh. Yeah, planning to get funded on that, as well as I already got another funded account. And if you're interested in seeing more of these trade recaps on the live markets, let me know in the comments. Check out my Road to Funded Futures Trader. That's already out. You got all the 12 parts. Best type of content that I've got on YouTube myself. Yeah, boys. Have a great day. Learn to trade liquidity like this. If you don't have a strategy yet, you can go to my channel and consume a bunch of content and really turn yourself into a profitable trader. And yeah, have a blessed day, guys. Peace out.